So this is Fisker on the daily chart, and this is the dollar mark. You can see the daily settlers level at $1.05 worked out very nicely on this setup. You had a drop in price, a basing candle, and the drop followed by a gap with the pullback filling any unfilled sell orders before price collapsed. Now, what's the significance of this candle here? It is the beginning of the close below the dollar mark. And since January 16th, price has been below the dollar. Price currently trades at 73 cents. And so what's the significance of price being below the dollar level since January 16th? Well, let's get into this article. So Fisker announced that on February 15th, it received notice from the New York Stock Exchange that it is not in compliance with Section 802.02C of the New York Stock Exchange listed company manual because the average closing price of the company's common stock was less than $1 over a consecutive 30 trading day period. In accordance with applicable New York Stock Exchange rules, the company intends to notify NYSE within 10 days of its intent to regain compliance with Rule 802.01C and return to compliance with applicable NYSE continued listing standards. Now, the company can regain compliance at any time within a 6-month cure period following its receipt of the NYSE notice if, on the last trading day of any calendar month during such cure period, the company has both two things: closing share price at least $1 or higher and an average closing price of at least $1 over the 30 trading day period ending on the last trading day of applicable calendar month. So to keep it simple, trade above $1 for 30 days. Now, the New York Stock Exchange notice has no immediate impact on the listing of the company's common stock, which will continue to be listed and traded on the NYSE during such cure period, subject to the company's compliance with other NYSE continued listing standards. So we've seen in recent months, Mullen fell into the same compliance, non-compliance rule, and they did multiple reverse stock splits. The question is, will Fisker have to do the same if it can't find buyers to pump up the price? Even if we get above this dollar mark, you're going to be hit with this daily sellers level. Now, even though price went up to the upper portion of the zone, we didn't get a close, but this signals that this zone is used up. But until prices close below or above that, we still have to respect that zone. All right, what's the bigger picture? Let's zoom out to the weekly chart. And above the daily sellers level, you have a monthly sellers level at $1.85. You'll see it much prettier looking on the monthly chart, but you have a drop in price, several basing candles. So these are weekly candles, and then you have to drop out. All right, so for compliance purposes, you just have to get above $1. But if price is gonna turn and move higher over the medium to longer term, it needs to take out this zone as well. All right, so this is how things look like on the monthly chart. And again, you can see it a lot better. You have a drop in price, one basing candle, and then the drop out. So for me, if price is going to reverse, again, medium to longer term, we need to see price close above the $2 level. However, the first obstacle is just to get back to $1 and stay above that dollar mark. But then they can go into the Mullen Automotive rulebook and just do a reverse stock split, and then they would be in compliance if the sellers don't push price back down below the dollar mark. So it's going to be key. They pick a ratio that's going to keep them above the dollar, despite and if sellers come in like we've seen in Mullen and AMC. Maybe they do a 20 to 1, 50 to 1. I'm not sure. Their board will have to decide, but nevertheless, if Fisker can't stay on the NYSE, then that's pretty bad news, as they won't be able to get easy capital to fund its operations, to get to that profitability or break-even standpoint, to potentially have long-term success. Thanks for watching. Subscribe. Please like the video.